The AVID market update. What the heck is going on in the market? Who has any guesses? Shane, what was that?
Guessing stable.
Stable. That's a good guess. Anyone else?
I guess going down.
Down.
Going up.
Up. Well, we've now covered all of the options, so I'll move on. So the interest rates have had a big impact on what's going on. And we've only since that happened, since they started going up, have we added this little update. So Dave Rusk at Idaho Central Credit Union.
It's awesome.
Yeah, Dave Rusk. Megan and Taylor just used Dave Rusk. And can I share your name?
Yeah.
Just closed on the most amazing land that they will be building on. Congratulations. Anyway, he's saying they're around 7% for 30-year fixed loans. And with a fourplex, and actually with all of them, 40% down is a magic number with Idaho Central, and you're getting better rates and better terms if you can put 40% down. Us investors, if we're looking at rental income properties, you kind of need to put that down anyway at these rates just to make anything, at least here in the area. So the rates are affecting things. They're around 7, depending. Commercial, same story.
Fed today, their announcement was they're still making up 3 cuts this year.
Okay.
Should be dropping in the latter half of the year.
Right. Well, we'll see. Dave's take before that announcement was anyone who says they know, it doesn't know, because nobody knows. So thank you for that. Oh, perfect. He needed to call me back. I already quoted him earlier. What else did he say? I mean, slide's old news. I just did the slide today. People. Thank you. I mean, rates are going down, guys. Commercial rates, one of my commercial lenders who I like to use has moved. So I did another sweep and checked with everyone, and Idaho Central has some pretty good terms on their commercial as well. And they typically want at least 25% down, but you're in that same range, right around 7%. And overall, in a micro scale right now, I'm feeling the market heating a little bit. Like we've got a couple offers. They're not getting super aggressive, but if you price something well, inventory has been a big part of the story, and buyers are looking for stuff to buy and they don't have a total flood of choices. And so they're a little price sensitive and you don't get to push too far on your buyers. So right now in negotiations, sellers and buyers are being fairly nice to each other. And we're seeing signs of the seasonal warm up that we would expect to see around here. But overall, the slide that never ends and the bar that keeps going off the table, you can see this is what rates have been doing. And the blue line is the interest rates. The rates have been affecting demand, and you can see here the seasonal sales price, the median sales price, the increase in the sales price last spring. This is last spring up here. And, so it's kind of in a way, everybody's right. Here, it's a little bit stable. It's showing at the end. It was up, it went down. It's a little bit all over the place with rates kind of flatlining and stable here. So I kind of would say all of you are answering correctly. This is our inventory line. So last spring, where we had this peak in the median sales price, you'll see we also, right after that, we were here. And right after that, our inventory went up. So the peak in the price sort of corresponds to the slough in inventory. So supply and demand has really been a consistent story throughout all of these updates that we make each month. And inventory also has, and interest rates, sorry guys, I'm really stumbling here, but interest rates also have been a big part of the story. So supply, demand, which is inventory, and interest. New construction, we have an increase in inventory in both Ada and Canyon County, but Ada County inventory is still down. Canyon County's inventory and resale is actually up a little bit. So here it is in the trend that shows everything. Ada County, where are we? Median price of homes is still right around that 500,000, above 500,000. The number of days on market is down, and the number of the inventory is down, and the median sales, the number of homes sold is down. But that median sales price is up a little bit from February 2024. If we looked hard enough and wanted to see a decrease in the median sales price, if we looked at various months, we could find one. Canyon County, same story. Median sales price overall is up. Days on market significantly less. And the inventory is up, but the number of homes sold is down. So our trends are not super trendy. There's a lot of stuff going on. But the bottom line is, if you're a seller and you have a home to sell, it's actually a really good time. And if you're a buyer and you want to buy something, it's not at all a bad time. We're not having buyers be absolutely frenetic to scramble and have to beat out 300 bids in the first day it hits the market. It's a little bit of a reasonable market to work in right now as a seller, as a buyer. That's the bottom line. So what about in the multifamily? What about in the fourplexes? We have been struggling to have fourplex data to report because not a lot has happened, but all of a sudden we did get some inventory and we have 12 listings active in Ada right now and 4 pending. The story that we're seeing is the stuff that's newer is going faster. It's selling. The cap rate just sub 5% on a 6-month trailing average, and we've been there for a while. And the gross rent multiplier has been a little bit all across the board depending on age. The stuff that's not selling is sitting there for a while. But here is the overall price trend. Going up. The cap rates, this is your red line on the cap rates showing your 6-month average, your 6-month trailing average, since the cap rate's going to vary a lot by whether it's a new build or an older property, location, etc. Was that a question? Okay, feel free if you have one. And this, of course, is the data from Tony Truss, who has been analyzing this data for decades. So it's been looking at all of these trends. Our gross rent multiplier trend is in the 185 to 190. And for anyone who's looking for a really quick valuation on your portfolio, if you update your personal financial statement when you finish your taxes, or you want to kind of look at what your net wealth is, those sorts of things, you could multiply your rents by 185 or 190 for a real quick, rough valuation. Okay, so this is those active fourplexes that we're seeing right now. And so what you'll notice about these is a lot of them are on Brogan Drive. Don't buy those, guys. Don't buy those. Just don't even think about it. Huh?
Is it stabby?
No, it's not a stabby area, so to speak. It's just poorly built, built as 8plexes, no parking. Oh, and you can only buy them if you're cash, which means you can only sell them to a cash buyer. So your audience of buyers is pretty low. Yeah. And Tony can come up with about 4 more reasons or 5 more off the top of his head and why he wouldn't. Pasadena was always a little stabby. That area was stabby, but I remember when that one had, that was Megan's word. She's like, I don't want to live anywhere stabby.
Fair enough, right?
Absolutely. The Canyon County fourplexes, the newer ones that we have active here with some high days on market. This is your DOM days on market, Maccabee and Polk. They have some pretty impressively high HOA fees. Impressive if, I don't know for whom. So yeah, one of them is $760 a month. And then Hulk is $600 per door per month. So a fourplex would be $2,400 a month HOA fees. Now it covers a lot of stuff, but you're gonna have to like. Now the reason, yeah, why, right? The reason is because they're built in a townhome, so they're separate parcels. And so they've kind of almost already got it split off, so you could sell them off individually, but now it's affecting how their performance can possibly be as a residential income property. And here's what we have in the 5+ units. So we have a couple that we're working on, that 8-plex or 7-plex, in the north end would go up in this slide. And, you know, oftentimes in Boise, there's just more 4-plexes than 5+. So that's what we're seeing right here still.
Do they have that much of an increase in each of them? Are they required to say what their value is? If they raise it that up?
Well, and those are newer properties, so it's not even an increase to that amount, but that's a great question, Walt, but those are starting off at that price, so they're fairly, this is just the package that new investor buyers are buying into. Mm-hmm.
So does the rent support that high?
It can't possibly, I mean, I didn't even bother running a pro forma on it, because it can't possibly.
Is there any action that, well, they don't own it yet, they have to own it to take action, but I mean, it just seems like, other than not buying it, that's the only action they could take, but if you think you got yourself caught into something that high, you'd have to take some action against them for that. They just,
Yeah, and I don't think, to answer your question overall, is there a max that a HOA can raise dues? Not really, I don't think so. Some HOAs have undercharged historically for dues, and so then they, you know, run into the need for capital repairs and they have to get done, and so then there's a special assessment. These guys are starting high off, right out of the bat. They do need to provide a budget and things like that, but
I mean, property is rated at such, you know, I mean, it would be a reason, I think, but in cases.
Even if say you are the builder, you build those townhomes, you charge that high fee, but you cannot sell, you cannot rent, what do you do? Just let it sit vacant?
yeah, I mean, let's watch it and see if anyone buys it. The newer properties have had higher HOA fees. They do bring some inclusions, but I think the one that's 600 a door, I think the play on that is not selling it to an investor, but selling it to 4 owner occupiers as somewhat affordable housing. And now they're, you know, it's almost more like a condo where they're not mowing the grass, they're not having to take care of the exterior of the building, you know, but it would be a townhouse, so. Yeah, I mean, or for folks like us, we just don't choose to buy that one. You know, but I don't really know what they're thinking. Kind of a good question. I hadn't really thought of. I was just, you know, I just hadn't picked my jaw up off the ground to ponder what they might be thinking.
They charge you more for more than long.
So the rental market update. Well, let's see what First Rate has to say, and then Danielle, I'll ask you. So, bus is coming. Get ready. Get thrown under it. No. Activity is starting to peak the closer we get to the peak of the rental market, which First Rate says is around April. And rents are not dropping, so to speak, but they don't have 5 people lined up for each rental anymore, which we saw for a while. And tenants are shopping around at renewal time. And so the big message that they were giving is renewing tenants should be the priority. And with more and more inventory flooding into the market, that new inventory is going to include amenities. And so, you know, you'll be competing with things with amenities, but vacancy is indeed up. Rents are flattening. For those who said flattening, Shane, in terms of the market, the rents are flattening. And then turnover costs are higher just because everything costs more now with inflation. Danielle, what would you add to that?
Yeah, no, I agree with Ryan. I myself have not been witnessing a lot of issues in terms of tenants that are coming up for renewal, shopping around. That's actually one of my main focuses is renewals and getting them at a good rate. So I personally have not had people shop if, hey, you want to renew? Yes, I think I've maybe only had 3 vacancies and it's to purchase a home. So for me personally, making sure your renewals are strong, keep the good tenants. But I think, yeah, no, I agree.
For a while there, it felt like you could improve and improve and improve, and there was just no ceiling on rents. They were coming up so high. So a lot of folks were really investing in improvements, and hopefully they got those done before the some of the inflation hit. And now it might be time to just not dump as much into improvements necessarily, but just kind of keep that rent in a more affordable range. Since the newer stuff will be quite improved, and so you might be competing more on price. The NARPM data we presented last month, so I don't want to go over it, but this is single family and multifamily rentals. And it just shows where things are on average, and averages are never really that significant anyway. But if you're looking at 3 bedrooms or 4 bedrooms, 3 bedrooms are around $2,000 in single family and less in multifamily, closer to 1,400 is what they have there. But for your rentals, when you want to look at what maybe your market data or your specific zip code or your city is doing, this is something I can get behind that Zillow's got going on. They're really not great at pricing homes unless it's a neighborhood where it's a subdivision, but their rental data on this link is really helpful. And you go to Zillow Rental Manager and you poke around and you'll find market trends. And they're showing that we're in a warm market, but I can literally type in Boise and they're going to show me that the median rent is $1,733, which is less than last month and less than last year. And 15% below national average still. So while we really question that affordability, we're still affordable. Nampa's more affordable at 24% below the medians. And their rents are up a little bit month over month and year over year. And then if we were to look at Meridian, it's literally like a Meridian. It's kind of right in the middle of this data. Some of it's up, some of it's down, and Meridian is actually a little bit more expensive, 8%, I think, than the national averages. So their rents were higher there. So that's the rental market update and the market update. Any questions? Because if not, I cannot wait to have a wonderful conversation with Renee, who can help us try to navigate what's going on. And Renee Goodwin is my trusted broker. She really helps me sort out, sometimes when you start accumulating, I don't know how all of you worked in your accumulation, but I started with an owner occupied duplex and then added and added and added. And all of a sudden I go, what the heck is going on with all my insurance? And how do I get my LLCs involved? And Renee was a godsend for me in helping me figure all that out. Okay.
Sorry, but before Renee goes on, starts, so regarding the vacancies, but in this valley, we have a population about 750-ish, depending on how you count, maybe close to 1 million people. What percentage of the population are renting?
Oh, that's a great question. I don't remember that stat. I know by certain neighborhoods, for example, right near downtown, we were at maybe 2/3 rental, which was much higher than other areas. Yeah, it was something up there, and that's probably even gone down a bit since a lot of the rentals have been converted to large single family homes. But yeah, that was like right in the north end or super close into downtown. But I can bring that stat for you next month.
Yeah, where would you get that?
Oh, the Census Bureau,
Because
and probably even their quick facts.
I wrote Marcus in the chat just to ask them some questions to see if they got a Boise rep too, and I just
Yeah.
see what I could find. It's just an interesting dynamic if we think about how many people could be renting in the Treasure Valley.
Mm-hmm.
And the other question that in the past, the historic data for the rent growth is usually 3% nationwide, right? In the last 5-10 years here in this valley, what's our rent growth rate?
It's been a lot higher. It's been really extreme.
And
Yeah. Well, let me just think on an example for a second.
I know last couple of before the rate started increasing, I know we went through a couple of years, rental shoot up so high,
Mhm.
but historically, what is going on?
Oh, historically, okay, not in probably a little bit closer to that 3%. We presented some data on that from the Economic Forum back in September, but yeah, you're probably right in there, somewhere in the 3 to 5%. I know that's what the real estate number is, so I need to make sure I'm not getting those two confused. But yeah, why don't I write those down? So it was rent growth percentage, and what was the first question?
And,
Percentage of population.
Oh, yeah.
yeah, the people renting was,
To an extent saturation.
Mhm.
so we see a lot of new apartments coming in.
So many.
Yeah, a lot of people, how long does it take for the valley to absorb the new units
Yeah.
before the?
That was my question, Stacy, because I was here last September when you presented that data. It was super interesting. It was like amazing. It was awesome. It was awesome. You did such a good job with that. So my question is, do we have any updated data on what's actually factored out from those predictions?
So next month, we have the commercial assessor coming to speak, and they look at all of the new build and the number of permits and all of that. So I expect that data next month. That's what I've been hanging my hat on. So we did it in September, and then we're doing it next month. And then maybe I should send you guys the September presentation.
It was
Well,
really
okay.
interesting.
Because it boiled down a whole day's seminar into some really key takeaways.
Yeah, not to blow it out of proportion, I mean, we were looking at some data on 17 apartment complexes. They held over 3,400 doors. Okay.
Yeah,
All right, so if you just put 3 people in each one, you're like at 10,200. You're less, I mean, you're less than 2%.
Yeah.
And I counted 16 on the way here, and I just was sitting there thinking to myself, thinking, we see these birdhouses going up and we might be overreacting to some extent. Because we see them go up in places that are common, but when you think about the percentage versus how many people are in the Church Valley, it's probably smaller than we think.
Yeah, and I know that some of the key basics are historically we've been undersupplied in housing. And then the builders seem to do boom bust where they it's too low and then they build too much. When they are adding 80%, 8 units for every 10 that we have onto our current inventory, which is just a big shocking number. So we know a lot of it's coming. Market will absorb some of it, but how long will it take? That's a great question. And then what will it do? How many units does it take to really change our vacancy rate by a percentage? And so at one point, I remember seeing data that wasn't scary. It was like 1 or 2% was the projected impact on vacancy. But it's time for new numbers on that. So let's see what we can get next month. And then, and then we'll do another deep dive, probably again in September or so.